What are the current trends in buying real estate, selling real estate, renting real estate, and investing in real estate? Will the coronavirus have an impact on our marketplace? Hi, I'm Paul R. Atkinson, your real estate coach, and in this video, we will discover 5 important questions that we've asked a lender, a major lender, Matt Weaver, with the Cross Country Mortgage. This opportunity is for us to see how our marketplace is today and how we can take advantage of the opportunity to sell high as a seller and buy low as a buyer. Would you like to learn more about that? I'm curious about that. I've always been curious about that until I heard the answers to these 5 important questions that I've asked a major lender like Matt Weaver, who has been in the business for more than 20 years, who have seen many times, many different markets that up and down. Watch this video till its end. See the 5 questions that we have asked Matt Weaver with Cross Country Mortgage and see how it affects your marketplace, how it affects you as a seller, how it affects you as a buyer, how it affects you as a buyer's agent, how it affects you as a seller's agent, and what you could do in your marketplace today. Very interesting. Take a look.
For the Matt Weaver team here in Boca Raton, and had the amazing fortune of helping just over almost 11,000 families here in South Florida. Have a wonderful team of 32, and we specialize really in the South Florida market with, of course, wonderful agents like yourself. So we're grateful for the opportunity. We're grateful to be here. What I would say, Paul, is the microphone on your side is a little bit going a little dim, so if you come in a little bit closer, because I want to make sure I can hear all of your wonderful questions that you have, and so the great audience can also hear as well. So thank you so much for that.
Absolutely, absolutely, Matt. All right, so how does this sound now? Is it better? Just do audio check. Better? Okay, wonderful. Good, good, good. So, you know, the audience that we have right now are buyers, sellers, and mainly, and they are, you know, people right now are just wondering, is this, I get so many phone calls, Matt, as I mentioned earlier, like yesterday, 3 calls in one day. Paul, is this a good time to buy? Paul, should we hold? Is the market in South Florida going to go down? You know, I just want to kind of get your feel on what you're hearing with all your experience and resources.
Well, wonderful. And it's a great question. And these are all great questions, of course, to be asking in a time like this. First and foremost, of course, my deepest sympathy and empathy towards anyone who is knows someone who has the virus or is sick presently, or someone who has perhaps lost their job. We certainly feel sorry for you. Our thoughts and prayers are with you and the rest of the world. Let's get right into the real estate market as it relates to Florida. Here's the good news, folks. The reality is that Florida, South Florida region primarily, is in such a wonderful position as it relates to values and where we plan on going. There's so many economic factors as to why South Florida real estate is poised and positioned to remain very strong. A few things. First and foremost, prior to the virus, we have had in droves many of the Northeast residents moving down to Florida due to taxation, heavy taxation that a lot of the states such as New York are facing. Watch, we've even had people from California moving to Florida. You've never heard that in years, and they're doing that. And so it's really interesting. That's one factor. The second factor, of course, is the older population. Florida is a destination spot and a spot that people want to retire in. It's a healthy lifestyle. Now, this is timing here a little bit, but when you stop and think about it, whether it be coronavirus or just the average flu, the flu doesn't do well in warmer weather. So I happen to believe Florida is even going to have a greater spotlight on its ability to live here and to sustain real estate values. Now, let's get right to people that are living here. And do they buy? Do they not? Do they wait? You know, it's interesting, Paul. I was told from a wonderful friend, a mentor of mine several years ago, that it's a fool's bet to try and sharpshoot a bottom, okay? And the reason I mention that is because, you see, with housing, you can never take a cash position, meaning you need a roof over your head. You can't say, you know what, I'm going to go ahead and take the sidelines from them and see where the market goes. In fact, here's what we did. We did a really interesting video on someone renting versus someone purchasing with a market shift of 6%, which is a big market shift, okay?
Yes.
And still the person owning comes out well ahead of the person renting. You know, it's interesting because Atom Data Solutions, third-party solutions-based company, had a report that came out in the beginning of the year that 52% of the US housing markets, it's still cheaper to own than to rent. And yes, Florida is in that. So I wouldn't say in New York, if you were living in New York, to own versus rent. Wouldn't say it in Boston, but in South Florida, it is much cheaper to own than to rent today. Not to mention, folks that are thinking about buying, your timing couldn't be any better because interest rates today are at their absolute lowest point in history. So when you look at the money factor, when you look at how much it costs to borrow today, and when you look at the fact that you can actually buy with as little as first, last, and security, it's a perfect recipe to purchase.
Interesting. Isn't that something else, Matt? Thank you so much for sharing that and that point. And I agree with you because, you know, I have to tell them that, look, we have an asset here, the sunshine. People are here, and not only that, but we also have the internal factor of our society where the folks are stepping up. I can recall just last year, maybe a little bit in this year, the first part of this year, you know, some of the buyers I've worked with, they are stepping and upgrading into higher homes or their ideal home, so to speak. So you have that effect too in our community. So that's really good to hear. Matt, I have 5 questions that, as you know, realtors, we kind of wanted to ask a lender, you know, and so we have 5 questions for you and we want to get into that. Is that a good time?
Please, please.
Absolutely. Okay, so the question number 1, Matt, that we're wondering as realtors, and just we want our buyers and our sellers to kind of share in on this. And listen, guys, if you're watching this right now, just go ahead and send us a little comment because this is an opportunity. This is for you to go ahead and just kind of reach out right now and ask a question, and we're going to get that on this air. If you want to ask Matt a question now, this is the time to do it. So, Matt, question 1, is this an opportunity to sell high as a seller and to buy low as a buyer?
Absolutely. And, you know, when I came up with that concept several weeks ago, or actually now it's been about 2 or 3 months, we did a video on it, and it did very well. A lot of our clients, a lot of our agent clients as well, yourself included, really liked the content within it. So we said to ourselves, today presents a very unique opportunity for homeowners that are not in their ideal home. Now, what is not in their ideal home? If someone does not foresee themselves in the home that they're living in today over the next 24 to 36 months, now's the time to really consider how you can sell high and buy low. And so what do we mean by that? How do you sell high and buy low? Well, let's think about this for a second. Depending on price point, okay, we'll go, let's say up to 400,000 or up to 450,000. You are almost certain that you're in a seller's market, meaning there is very low inventory in today's market, which allows you to capture a very high sale price. Now, let's assume for a second that you want to now sell at that price and you also want to now upgrade. Okay, well here, watch. If you're thinking of upgrading, number 1, interest rates are at their absolute lowest point. So if you have the ability to borrow money at its lowest point in US history, the overall cost of that new home will be lower. Not to mention, depending on price point, for those that are looking to upgrade, let's say in the $600,000, $700,000, $800,000 price points, okay, those markets are not necessarily as strong today than the lower price point that happens to be more in a seller's market. So there's where the homeowner today that is not in their ideal home is thinking of upgrading has a lot of opportunity in today's marketplace. Folks, what I would say, if you're not in your ideal home, it's a simple exercise. The first piece of the exercise is to first and foremost derive at value. And you're going to hear it from me. Zillow can't give you the value of the house. You got Paul right here. All you have to do is give him a very simple phone call. Tell him that you want a CMA, a comparative market analysis. So he's going to derive at value. The second step is to now figure out how much you owe on your existing mortgage. Third step is to calculate the cost. And the fourth, that's going to give you your equity. And then here's what we do. Here's where I step in. We take that equity position, we match it up against how much you're willing to pay on a monthly payment in terms of your new monthly payment, and then that derives at a new sale price. Folks, we just pre-approved a client, okay, that lives in a $385,000 house, okay? We calculated his equity, all right? He's upgrading to a house of $585,000, okay, so $200,000 more, and his payment for the new home is almost the same as his existing home. So the power of rates right now has to be exposed. The thing is that for years, people have been hearing, oh, rates are so low, rates are so low. Yes, they are, but they're at their lowest. And if you take a look at what every 100,000 costs you to borrow, you'd be pleasantly surprised.
Interesting, Matt. Let me tell you something. I'm so excited when every time you tell this story, I love it because it is so true. People don't realize right now that their buying power has changed. For example, if you are sitting on the fence, if you're a buyer and you're thinking, well, should I buy now or later? Well, we don't know about later, but right now you have a very strong buying power, especially in South Florida. And so many of my own buyers, my own sellers, just like you mentioned, has stepped up. You know, I could call so many names, and some of them are watching right now. Just please, just let these people know that I have done this for you, and let's just continue to move forward and grow in our lives. So, Matt, thank you for that one. Here's a question number 2, buddy. What are lenders doing to get buyers financing right now? I mean, the finance market is upside down. But why are you so calm?
That's a great question. The answer to that question, why am I so calm? I'm so calm because the truth of the matter is that this is my third lending cycle. My first cycle was, of course, the tragic September 11th event. My second lending cycle was 2008, which was the Great Recession. My third lending cycle, of course, is this crisis. So I've been down this road before. They're all just different crises, but the outcome is typically the same. Now, the difference between today and 2008 is real estate values, I do not believe, are going to be impacted. Okay, but let's get right to your question. All right, so the truth of the matter is that I'm with a company called Cross Country Mortgage. Cross Country Mortgage today is a very financially stable mortgage lending operation that has not changed its guidelines virtually on every loan product out there. Most lenders, not all of them, most lenders have now taken a very conservative position and have changed mortgage guidelines. What do I mean by that? Okay, so let's use FHA as an example. FHA is a wonderful loan product and a product that somewhere between 25 to 30% of buyers in our market here locally take advantage of. Here, watch. I took advantage of FHA financing at one point. Okay, it's a great product with great interest rates. With that being said, the product allows for down to a 580 credit score if you're putting down 3.5%, or down to a 500 credit score if you're putting down 10% or more. However, many lenders have taken the position of increasing that credit score requirement to 660, 680, which cuts out a huge amount of buyers. Now, we at Cross Country Mortgage have not taken that position. So what's really, really stressful for a lot of the lenders and a lot of the buyers today is there's so many buyers that were under contract that were going through the loan process that have actually been declined days before closing. Now, fortunately, they have reached out to us. We have stepped in on many occasions. We're at deal number 24 in the last 9 days that have been declined by another lender that we're saving and we're taking to the closing table.
Oh.
So while my operational staff is not that calm, I still, of course, remain to be that calm. You know what it is, Paul, is that consumers have to understand one thing, that not every lender, it's not a one size fits all anymore. That was the case as little as 2 months ago. Here, watch, JP Morgan Chase, a wonderful bank, a wonderful lending institution. They came out just last week saying that conventional borrowers, conventional financing, you have to put down 20% or more and have a 700 credit score or more.
Wow.
Which the conventional guidelines is a 620 with as little as 3% down. So you have to understand who to go to in terms of lender, and you got to get a second opinion. Don't stop at the first stop.
Very good. Matt, this is amazing. And, right now, what I'm hearing from you, and I want to repeat it so everyone can hear what you just said. From my understanding, and just I want to confirm with you, Matt, are you saying, and it's true, I know I have had friends that called me that says, hey, Paul, my deal is falling apart. I can't believe it. And I said, what? Okay, because the lending guidelines have changed. Understood. And you're saying, Matt, that in your company, your firm, Cross Country Mortgage, there is not so much of a change in regards to the guidelines currently, so you're continuing to process and close on loans. Is that what you're saying?
That's exactly what I'm saying. What's happening, Paul, is that perhaps in many cases, the loan officer is not communicating to the real estate agent and to the buyer the appropriate way. And here's what I mean. What's happening is a lot of agents are being told by a loan officer that FHA has increased their credit score limit. However, the call should go like this. Hello, my name is John from XYZ Mortgage Lender. I'm calling you because I can't do your loan because of our company's position as it relates to credit scoring. There are other lenders out there that still adhere to what FHA guidelines are, but for us as a lender, we have taken a different position. So I would suggest calling another lender. That's the proper way that the real estate agent should be told by the loan officer, and that the buyer should be told by the loan officer. But what's happening is that it's being, in a lot of ways, disguised as the overall lending universe has changed.
Right.
It's not the case, Paul.
Right. Wonderful. I am so happy that we have this opportunity, Matt, to talk to you and just get my group of people, my circle of friends and family and clients and buyers and sellers to just learn about what is happening in the mortgage industry right now with real estate. Matt, question number 3, and we sure do appreciate you. Are there any new or expected programs that can help in the real estate market today?
And that's a great question. What I can say to you is that there isn't any new programs that are on the horizon today. What we're going to be blessed with is which lender, and again, cross country is not the only one, which lender is going to maintain the existing products. Because the truth of the matter is, Paul, as you know, I've done 29 home buyer seminars here in Florida. It was now the highest attended. And of course, we had to put it on pause. We're actually going virtual, which we're excited about. Yes. But what we did was the premise behind our home buyer series was the following. Too many people are misinformed of just how simple it is to buy a home. So the reality is that the mortgage products that are available, assuming that lender is still participating in those products, is the following. Most of these products make it so easy to buy. You have 0 down, you have 3% down, you have 3.5% down. Paul, we talked about this just last week. Let's say you're working with a buyer who has first, last, and security, right?
Yes.
Okay. And they say, okay, well, I have first, last, and security, but I don't have money for closing costs. You know as well as I do, you structured many transactions to where you got the seller to pay their closing costs. Absolutely. And most people are unaware that they can do that. So what we always try to say to potential buyers, someone who's just thinking, not necessarily having to take action, but just thinking about it, leverage our pre-approval process. It's simple, it's quick, it's efficient, and whether you're looking to buy today, 6 months from now, or a year from now, you'll know exactly where you stand, and you'll be pleasantly surprised with what your rental dollars can actually buy you in today's market, given how simplistic it is for financing today.
Absolutely, Matt, this is good. So, what I'm hearing here is that there's still an opportunity for us to close on deals. Get with the lender, such as yourself, experience. You've been through 9/11. You've been through so many things, and experience matters, and we sure appreciate you. Matt, thank you so much. Question number 4. We have 5 questions, and we're in the 4th one. So, can buyers close on their purchase in 21 days or less?
That's a great question, Paul. And so, it's interesting because I do a lot of video. I do a lot of social media posting. I do a lot of emails. And the truth of the matter is that a lot of our competitors are not too happy with us, Paul. Okay. And the reason for that is because pre-virus and post-virus, we still have our 7-day close model. And what I mean by 7-day close model, I'm referring to conventional financing, I'm referring to FHA financing. Okay, so 90% of our products, we can actually assist and close a buyer in 7 days from beginning to end. In fact, in the month of April here, we have 11 transactions that close anywhere between 7 to 10 days in totality from beginning to end. The 21 transactions that we have taken over in terms of being declined prior, oh goodness, we've taken them over from beginning to end anywhere between 8 to 9, et cetera, in terms of days. So 21 days, let's put it this way, my operational staff will say, thank you, okay? Because I'm pressing a lot more to them that we're closing a lot quicker. So, but how does that help you and your clients? Well, it's really simple. If a seller's really motivated in today's market and the house is vacant, right? And that buyer really likes the house, and let's just say the buyer needs some closing cost assistance. Can you imagine, Paul, you and the buyer going to the seller and saying, I'll tell you what we can do. We can go ahead and get your house sold in 7 days. Just go ahead and contribute a few $1,000s towards my buyer's closing costs. And that's how we're taking advantage of today's market. We're basically turning the buyer into a cash buyer, giving them all the leverage. So think about that.
Absolutely. It's amazing. I mean, just think most of our contracts as a buyer that we've put together, it is going into a situation where the loan approval time is 21, 30 days alone. That's standard normal. Matt, what you're saying to us is a miracle. I could just jump through this mirror and give you a big hug, buddy. Listen, how is it possible? But you're amazing. The team is amazing. You are stating to us and have been doing for so long, 7 days to close. Who does that? 7 days. It's amazing. Thank you so much, Matt. We really appreciate you. Question number 5. What are the major lenders? You're a major lender, so we consider you that. What are you seeing as far as our real estate market and lending? You talked about that earlier when we first came on, but now let's just sum it up, being that this is the last question. What should a buyer and a seller forecast post COVID-19?
Oh, absolutely. And another great question. Okay, so I said it screaming from the mountaintop starting about 10 days ago. And I said it in 2008. I said it during September 11th, okay? And it's gonna come down to the public, to real estate agents, really understanding 2 words: overlay, restrictions. And what an overlay restriction is, folks, is just like I talked about just a little bit ago, which is a lender adding restrictions on top of what is allowed. So I want you to think about this for a second. Fannie Mae and Freddie Mac are what we call the mommy and daddy of lending, meaning that they control conventional financing. Fannie Mae, Freddie Mac allow down to a 620 credit score. They also allow as little as a 3% down payment. However, just using JPMorgan Chase as an example, and I'm mentioning them because they sent out a press release, so it's common public knowledge, okay? But JPMorgan Chase came out with a press release saying that from going forward, for at least the foreseeable future, a borrower coming to us, meaning Chase, has to have a 700 credit score or a 20% down payment or greater. Folks, that's called an overlay restriction. So the challenge that agents are gonna have, the challenge that buyers are gonna have, is them deciphering the difference between that particular lender's guidelines versus what the lending universe will allow. And I talked about this explicitly in 2011. And for those that actually are paying attention to this very topic, it'll make or break your home sale transaction. It'll make and break you as an agent in terms of how many buyers you can service. It's just that simple. So the goal is to work with a lender that has minimal or no overlays whatsoever. And it's so important because Folks, I can tell you this, post-virus, my prediction, post-virus and throughout the balance of 2020, overlays will exist, and they're going to exist for a long time.
I agree with you, Matt. Thank you so much. And this has been amazing. I just want to recap for all of us, and what we've learned from you today is that, one, South Florida is an amazing marketplace. I seem to have an echo there. Is it, you hearing me okay? Okay. South Florida has an amazing marketplace and for real estate. So we anticipate, we speculate, we believe, we feel, we know that our market is strong for the sellers to sell high, and it's good for the buyers to buy low. What an amazing combination. How is that even possible? How can a seller?
It usually is. It usually is not.
Right. You know, it's either one or the other. But if you're a seller right now, you can actually sell high because the buyers are flexible. Let me tell you the secret right now, guys. Half of the buyers have left the marketplace. Half of the sellers have left the marketplace. But the sellers that remain and the buyers that remain are causing the buyers to multiple bids, multiple offers. So the seller is able to sell high. If you want to sell today, contact us now. If you want to buy, look at the programs. You know, Matt is here. This is a man who can put his team, you can close in 7 days. Who does that? You can get your pre-approval before you even go out to make your offer. What does that mean? It's not a pre-qualification. It is a pre-approval. So it's an amazing ability for you to come to the marketplace and have that power. And Matt, you also talk about these overlays, and people might not understand what that means, but it's basically the regulation and the guidelines that these lenders make that you're not able to even get past that, get in the door. Just imagine, they have the money, but you, before you come through the door, they're regulated that you have to wear a pair of shoes, a red hat, and a green sweater. If you don't have it, you can't get in the door.
That's exactly right. And we like red, blue, black, purple. We like it all.
That's right. Love it, love it, love it. Matt, any final word for us as we shut this down? What is your final word for our buyers or sellers?
Okay, so again, thoughts and prayers for all of us here in Florida and for the rest of the world, number one. Number two, folks, it's an amazing time. It really is. And if you're renting, your timing couldn't be any better. Swoop in, make the right deal for yourself. As many of you have heard me say in the past, perhaps, owning a primary residence is as fiscally responsible as health insurance. And I do mean that. I'm not referring to going out and buying 15 homes to rent it out. I'm referring to your primary residence. It's always your best avenue to generate your own self-worth and net worth. Truly. For sellers, gosh, I mean, talk about upgrading. You can now upgrade a few $100,000 at being at roughly the same monthly mortgage payment. That's almost like free money. So it's a great time. And again, we wish everyone all the best during this time.
Matt, thank you so much. And likewise, everyone, stay safe. We love you all. We appreciate the opportunity. Matt, until next time, have an amazing day. Thanks, everyone, for joining.
Now that was amazing. This was an amazing opportunity for us to hear and see for ourselves what is happening in today's real estate marketplace as a buyer, a seller, a renter, or an investor. Look at the opportunities. Look at what you can do. You're able to sell high as a seller. You're able to buy even low. Now, buying low, meaning that the prices right now on the real estate market is high in most places. In South Florida, you could find that. However, we've just discovered that the same buying power or payment that you're able to take on your existing home, you could get an upgrade to a new home, your most ideal home, and pay the same payment. Wow, is that amazing or what? Not only that, but we've discovered that there are lenders here in your marketplace that will allow you to be even more competitive than a cash offer because they're able to close in 7 days. Who does that? That's amazing. What you are to do with this learning today is to get out there, Get connected with those lenders, those realtors that are able to work with you in the most effective and efficient way. So this is important. It was a great video. It was great. I know it's a little bit long, but listen, guys, what do I always like to say? Until next time, let's go get him, Tiger. I'll see you real soon.